Welcome back. Is topic Kenya. And the last time we left at differences caused by errors. Remember, we looked at the difference between cash and bank balance, and we came out with the first cause, which is time differences. So today we are going to look at differences caused by what? By errors. And for instance, what I'm going to say today, this is that the difference between the cash book and bank balances may also be caused by error on the part of the bank or in the cash book entries. Okay, so frequent bank reconciliation is advisable so as to identify and receive errors, not receive. Which word I'm going to use? Rectify. I'm totally in a different country. Rectify, sorry guys, rectify errors as soon as possible. Okay, that's why by frequent bank reconciliation, that's why it's advisable for an accountant to come up with bank reconciliation, okay, so as to identify and rectify errors as soon as as soon as possible. So it is good business practice to do what? It is good business practice to prepare a bank reconciliation statement each time a bank statement is received. So if a bank issued a bank statement, always as an accountant, make sure you have your bank reconciliation statement. So this will ensure that any queries either with the bank statement or in the firm's cash book can be resolved. Okay, so at that point we have this particular point whereby the bank reconciliation the bank reconciliation process. So you're going to check about bank reconciliation. We have bank reconciliation process. Reconciliation process. The reconciliation process. Now, when a bank statement has been received, any errors and queries are first identified and dealt with before the reconciliation. So once all errors are corrected, then the reconciliation of the differences between the cash book balance and the bank balance is carried out. Okay, is carried out for you to get that bank reconciliation process. Okay, so you're going to look at step 1, how we go about it. So step 1, identify the difference by ticking. Let me write this. Identify the difference. Identify the differences by ticking off the items that appear in both the cash book and the bank statement. That's the first step. You make sure you have identified the differences by ticking off the items that appear in both the cash book and the bank statement. Make sure you tick to identify those items that appear in both cash book and the bank statement. This will help you to identify, for example, the direct credits for such as interest and so on. Then we have our step 2. Our step 2 process, the unticked items. The unticked items on the bank statement include the bank charges. Those now the unticked items. The unticked items on the bank statement. The unticked items on the bank statement. The authentic item on the bank statement include the bank charges, direct credits and payment standing orders. Include the bank charges, direct credits and what? And standing orders. As I said earlier, remember on our previous video, I say what I say, that standing orders, they are like a firm may direct a bank to pay them some amount of money to a specified account on behalf of them. Okay, so don't forget about that. And then there's this point. Remember, these are entered into the bank columns of the cash book. Okay, they are entered into the cash book. Okay, they are entered into the cash book. They are entered into the cash book, specifically on the what? Specifically on bank columns. Remember, these are a bank reconciliation statement, so you're dealing with bank what? Bank columns of what? Of the cash book, to bring it up to date. Okay, in other words, what I can say is the cash book balance is adjusted to reflect these items. Remember, the first step, we say you tick first the items that appear in the cash book and the items that appear in what? In the bank statement. So those items that don't appear, the antique ones, for example, the what do you call the bank charges, the direct credits and the standing orders. Okay, so those are the items that may make the difference between the cash book and the bank balance. Then direct to our step 3. These are the steps to be followed when what? When working out bank reconciliation statement. So the antique items from the cash book, let me write it. The antique items from the cash book, the antique items from the cash books are the results of the timing what? Are of the cash books are the results of what? Of timing difference. And on our previous video, we listed the causes or the results of timing difference, and some of them were what? The bank charges, direct credits, standing orders, and uncredited checks, and what? Unpresented checks. So make sure, if you haven't watched the previous video, make sure you do so that you can understand well what is going on bank reconciliation statement. So those are the 3 steps to be followed when working out bank reconciliation statement. So the next part, we are going to look at what? We are going to look at the structure of bank reconciliation statement. So the structure of bank reconciliation statement. And from that point, the first step is always start with the balance. It's a obvious thing. Like the first step is what? Balance as per what? As per cash book. Balance as per cash book. So let me come with this. So this is cash book adjustment. Always start with that. Cash book adjustment. So the first step is what? Balance as per cash book. Make sure you find out the video of me trying to explain the cash book, and you'll be familiar with it, whereby we have the 2-column cash book, we have the 3-column cash book, we have the petty cash book. So make sure you watch that video for you to understand well. So at this point, balance as per cash book, you come up with the figure. Let me use XXX. Then after that point, you add bank charges. Why? Remember, in our bank statement they have already added the bank charges, but us as a business we haven't added any bank charges. So what will happen? We are going to add it, because we find out one of the antique items in the cash book is bank charges. Okay, but the bank on the other side, they have recorded those charges. Okay, so for you to find out that cash book adjustment, you are going to what? To add bank charges. You're going to add those bank charges. Sorry, not add. You're going to subtract. You're going to subtract. I use bracket for subtraction. Okay, you're going to subtract the bank charges in the cash book adjustment. Okay, we're trying to adjust them. Then we have standing order still. Then we are having standing order. The standing orders, what will happen? We are going to subtract still. Then we have direct credits. We are not aware of this, so this one there we are going to add them. Okay, we are going to add because we are not aware as a business, so we are going to add them. But bank charges and standing orders, we are going to subtract them from our cash book. Okay, then from that point we are going to now to have what? We are going to have our adjusted cash book, our adjusted cash book balance, our adjusted cash book balance. Okay, then the next part after that, you're going to now bank reconciliation statement. As per that, the date you have been given. So this is just a structure on how to work out. Now from that point we have what? Always remember that this is the procedure, so don't forget about it. So from that point we're going to add adjusted cash book balance. This is it. Now this balance, you bring it here. Okay, the balance that you work out and found out that in cash adjustment, you found out that the adjusted cash book balance will be this figure, so you bring it at bank reconciliation statement. This is all the procedure we are going to find out. Then after that point, you add unpresented checks. Remember, these are checks that you have been issued by the bank as a company, but you have not yet presented it to the bank account. So what will happen when you finding out the bank reconciliation? You are going to add these unpresented checks, because in the bank side they have added it. Okay, they have added it, but on your side you have not added them. So you are going to add these unpresented checks. You're going to add these unpresented checks. Then you less uncredited checks. Remember, you are going to less uncredited checks, because let's say this data bring a check and you have recorded it in your cash book, but you have not direct the bank to what? To credit on the other side. Okay, so you're going to less them. You less these uncredited checks, and after that you're going to find what? You're going to find out the balance as per what? As per bank statement. And that's the procedure on how to deal with the question concerning bank reconciliation process. So that's all, but we must do one example for you to understand well what is going on. Good. So we have an example here, and I'm going to introduce it to you. So make sure you have written this example down on your book so that you can understand well when I'm working out. So this is the example. The balance in the cash book of Mr. Chuma as at 31st 12 2003 was shillings 30,000. On the same date, the balance as per the bank statement was cash 50,000 on the credit side. On examining the bank statement, what will happen? Mr. Chuma found that the cash book had the following differences. So first, check totaling shillings 8,000 had been paid into the bank on 31st 12 2003, but were not credited by the bank until 1st January 2004. So these are what? Uncredited checks. Second, bank charges amounting to shillings 600. Okay, this is a cash book adjustment, so you're going to subtract bank charges. Then on that, a standing order to KPLC, that is Kenya Power, KPLC of shillings 800 had been paid by the bank but not entered in the cash book. On fourth, interest income amounting to shillings 13,000 collected by the bank did not appear in the cash book. On fifth, amounts paid to suppliers but not presented for payment to the bank amounted to shillings 16,400. Okay, so these are now what we call the unpresented checks. Amounts paid to suppliers but not presented for payment to the bank account. So required adjusted cash book balance and bank reconciliation statement. So let's work out this. As usual, we start with cash book adjustment. Cash book adjustment. So make sure you have written the question down there so that you can understand well how I'm working. It's always recommendable you have your question at the other side, then you're working on the other side so that you can understand what is going on here. So we start with balance as per cash book. Balance as per cash book. And we have been given balance as per cash book to be what? To be 30,000. Good. Then after that point on check totaling shillings 8,000 had been paid into the bank on 31st 12 2003 but were not credited by the bank. These are what we call the uncredited checks. So we go to number 2, bank charges. Bank charges. You have been told here that bank charges amounted to shillings 600. Okay, so you're going to subtract 600 here. Then the next step, we are going to number 3, a standing order to KPLC of shillings 800 had been paid by the bank but not entered in the cash book. These are the standing orders. Okay, so you're going to subtract standing order, and I recommend before you work out this, make sure you have watched our previous video. So 800, you subtract them. So from that point, then we have interest income amounting to shillings 13,000 collected by the bank did not appear in the cash book. This is the interest. Remember the direct credit. We say a good example of a direct credit is interest. A direct credit is whereby the bank on their side they record some figures, but by the business is not aware. Okay, so we're going to write direct credit, and our direct credit here is interest of how much? Of 13,000. So we are going to add this because on our side as a business we don't have this interest. Okay, so we are going to add to make sure there is no any difference, okay, in terms of direct credits. Then after that point, now let's find our our adjusted cash book balances, which will be this will be 14, subtract 30,000 will be 20, will be 16. Good, going to 13,000, it will give us 4, so it will be 41,600. 41,600. This adjusted as per cash book. We have adjusted our cash book. Then the next step, we are going to what? We are going to bank reconciliation statement. So this is bank reconciliation statement. Bank reconciliation statement. Bank reconciliation statement. So a bank reconciliation statement, we go to direct to this adjusted as per cash book, adjusted as per cash book, which is 41,600, as per cash book, which is 41,600. Then we add unpresented checks. So easy. If you understood, then everything is going well. Add unpresented checks. And unpresented checks here at our first place. Check totaling shillings 8,000 had been paid into the bank on that first 12,003 but was not credited. So those are uncredited checks. Back to number 5. Amounts paid to suppliers but not presented for payment to the bank amounted to shillings 16,400. So it is 16,400. They were not presented to the bank, so you are going to add them, okay? Because the bank on their side, they do not have this presented, they do not have these checks. That's why we call it unpresented checks. Then you're going to less uncredited checks. And uncredited checks here is what? 8,000. So we are going to now to have our balance as per cash book. So this will be 610. So this will be 610. So it is 30 carry 1, 6, 7, 8, 16, 6 carry 1, 4, 5, 6. So we are going to have 6, 14, 4. This is 4, 5. Yeah, 5. So we are going to have our 50,000 because 8 plus 6 is 15. Not 15. What am I doing? So if you use your calculator well, I don't have calculator here, so make sure you work out well. So it's 6, 4, 10, which is very correct. 0, 1. So 8 plus 6 is 14. Not 14. 14. 15. 16. 31. I'm going to have. Yeah, that's why we have our 50,000. Make sure you use calculator there. Make sure you use your calculator, and that's how we work out what? We work out our bank reconciliation statement. That is the working formula. For example, cash adjustment, balance as per cash book, 30,000. Then bank charges, standing order. Make sure you subtract the bank charges, you subtract the direct order, but you add the direct interest. You subtract the standing order, but add the direct credit. Then after you find your adjusted as per cash book, you make sure you take it to the bank reconciliation statement adjusted as per cash book, which is 41,600. You add unpresented checks, you less uncredited checks, you add uncredited checks. So that is for all. Make sure you subscribe, like, comment and share if you have any other question. So let me still find out this. That is 41,000 plus 600. I'm not very. Plus 16,400. 0, 0. This is 10. 6, 7, 8, 4, 1, 5. 58. You subtract 8,000. 0, 0, 0, 0. Yeah, it is 50,000, which is correct. so we are incorrect. That is 50. Balance as per cash book is 50,000 and adjusted per cash book is 41,600. So thank you guys. Make sure you like, comment and subscribe for next video. Our next part, we're going to check what? The bank overdraft. What we call the bank. We're going to check about the bank overdraft. Bank overdraft. So thank you. Make sure you subscribe, like, comment and share. It's Topic Kenya.